Tammy, why don't we start this off? If you can give me maybe a few minute overview on the whole risk management process, what the team does, who's involved, because a lot of people, when you first talk about private lending, everyone thinks it's all about underwriting. And, I would say that, in my mind anyways, it's a third origination, a third underwriting, and a third monitoring afterwards. So maybe just talk a little bit about, what the team does, and then we'll kind of get into portfolio health, what you're seeing, with the existing book, stuff like that.
Sure, absolutely. Underwriting is obviously key. You've got to get it right, structured right at the beginning, making the right decisions up front, and then handing it over to the operations team. And as I said before, we're not a set it and forget it lender. And that means that we're spending a lot of time on a weekly basis looking at collateral performance. So it starts with our collateral analysts who are ingesting the information from our clients, looking at the receivable performance, reviewing collections, looking at the new sales. How does that fit into what the client expected to be doing during this period, managing sort of that budget to actual expectations and understanding where they are from that perspective. So the collateral analyst does a lot of work utilizing our systems and processes and our portfolio software, and make sure that what we're seeing from a performance perspective makes sense. That information rolls up to the relationship manager, working side by side with the collateral analyst, reviewing that information, having the conversations with the clients. Those conversations happen on an ongoing basis. We're asking questions, want to make sure that we understand what's been challenging in their business, what's working well in their business. Erica, I know you said it in the past, and I've heard you sort of make the comment, and it's a great one. We could probably put together our client's balance sheet and income statement before they could at the end of the month, based on seeing all of the information we see on a week over week basis, right? We know what their gross margins are. We know what their sales are. All of those pieces we put together on a weekly basis. And it comes back to who we are, which is very much collateral focused, understanding what we expect to see from our client. But even more importantly, I think it comes back to that relationship perspective. You have to be able to have the hard conversations, the tough conversations with clients. You have to feel comfortable asking questions that are important to understand, and also being really good at listening and hearing what's important to our clients, and hearing when there's challenges in the business, and thinking about ways that we may be able to work together to work out on an issue or a problem. And that comes back to win by not losing, understanding what's going on in the business, marking it against what we expect to have happen, and giving ourselves the runway if we have to make tough decisions or we have to move or pivot around challenges, being able to be creative and do that. And the earlier you can identify an issue or a challenge, the more time that you have to be able to deal with it appropriately, and really manage any sort of risk that might be prevalent or at issue at the time.
If I can, I'll just add on a little, as Tammy said, all of that gets set up from underwriting. So just to drive home the point, we are very collateral focused, but it's not about the collateral. Anyone who would say, well, you have this piece of equipment, it's worth $10 million, we're only looking for $3 million against it. Anyone would say, hey, that makes sense. But what's really important for us is the story, as Tammy's talking about, the relationship, because not only is that important throughout the life of the client, but we've got to set that up from day one in understanding, because we are not loan to own. We do not take the view that, well, I can just liquidate it and get my money back. We don't want to. It takes time, effort, money, brain damage. It exhausts everyone having to liquidate anything. So we don't want to end up there. We want to know we'll be safe if we do, or relatively in a good position if we do, but we don't want to be there. So something I often say is, when I speak to a potential new client, the first thing out of my mouth when I talk to them before I even get to the collateral is, tell me where you've been, tell me where you are, and tell me where you're going. And it has to make sense. What happened in the past? What are you dealing with today? How can I help that? And where are you going to go with that? And does where you're going to go make sense? Are you going to have a viable business in 6 months? Or, as we say, do they need to go for a car wash and wax, right? Does the company need, a restructuring or to file or make a proposal? We want to get into an opportunity where they may not necessarily be in the best situation today, but let's understand it. Let's see that where they're going to go with it makes sense. And then, as Tammy said, applying that logic throughout the life of the client with us. Are they meeting those expectations? Sometimes they don't, right? But then it's readjust, reconfigure. How do we approach this now? You didn't hit your targets, but how are we going to tackle that now? What are your next plans? Consistent understanding from day one throughout the life. So I just wanted to drive that point really home.